Hello students, my name is Dr. Rajani Agrawalla and today I am going to present the topic of non-profit organization. So what is non-profit organization? Non-profit organization, in short, it is named as NPO. So what is NPO? NPO or non-profit organization is a type of organization that operates for the social, educational or charitable purpose rather than generating profit for its member or owner. It focuses on making a positive impact on the society and strives to achieve a specific mission. So the main aim of the non-profit organization is to serve the society. It do not run to earn profit. Then the question arises, how then it survives? So the main source of income for the non-profit organization is grants, government grants or private grants, donation, legacy, income from investment and all that. So these profit usually have a charitable interest in the area of like education, health, religion, sports. Then coming to my next slide, what is the significance of this non-profit organization? Why it is important? So these organizations play a very critical role in addressing societal need. They work towards various causes like education, healthcare, environmental conservation and community development. Without their dedication, many essential services would be inaccessible to those who are in need. So these organizations are very much important for the society where service is required and they do not have any intention to earn profit. They will do whatever they do, it is for the service of the society. So these type of organizations play a vital role in the society. Then coming to the objective of non-profit organization, the primary objective of the organization is to fulfill its mission and make a positive impact on society. This can involve providing services, advocating for change, raising awareness, or supporting unprivileged communities. The objective is driven by the organization's values and visions. Now, how many types of account will be maintained under non-profit organization? Like in profit organization, we have to prepare trading account, profit and loss account and balance sheet. Similarly, in case of non-profit organization, we have to prepare receipt and payment account, income and expenditure account and balance sheet. So I will make you understand all these things in details. So first of all, coming to receipt and payment account. What is receipt and payment account? You can see here, receipt and payment account, as the name suggests, receipt means the cash receipt and the payment means the cash payment. Whatever cash we have received or we have paid will be maintained in this receipt and payment account. It may be of revenue in nature or it may be capital in nature. Okay, so the main purpose of this receipt and payment account is to record the financial transaction. You can see here, the main motive of this is to record the financial transaction. The receipt and payment account is used to record all cash receipts and payments made by the organization. It helps in tracking the organizational financial activities and health accurately. Right? Then second one is that it is the cash basis of accounting. So as we know, there are three bases of accounting: cash basis, accrual basis and hybrid basis. So in cash basis of accounting, the organizations maintain their accounts only on cash. So any kind of outstanding or prepaid items are not considered in cash basis. Only cash receipt and cash payment will be recorded here. So the receipt and payment account is the cash basis of accounting. So this account follows the cash basis where revenue is recognized when cash is received and expenses are recognized when cash is paid out. This ensures transparency and accountability. Then this receipt and payment account also shows cash position. It provides an overview of the cash position, including opening and closing balance for a specific period. It helps in understanding the organization's liquidity and cash flow management. So it helps the organization in many ways, as it is equal to a cash book. Like a cash book records all the cash receipts and cash payments. Like that, receipt and payment account plays the same role of recording all the cash receipts and cash payments and make us aware or updated regarding our financial health. Coming to our next slide, this is the specimen of the receipt and payment account. Here you can see, first of all, here it is two balance brought down. This is of cash or bank. What will be our opening cash or opening bank in hand on January 1 or starting of the year? It should be recorded on the debit side of the receipt. And like the same, whatever cash or bank account amount remains with us at the end of the year will be written here on the credit side as by balance carried down. Okay. Now whatever we have received or paid, maybe in revenue in nature or capital in nature, we have to record here in between the years. So what are the revenue receipts? It may be subscription, it may be donation, it may be grant, it may be sale from old newspaper, sale of grass, advertisement, anything. And the revenue payments are salary, printing, rent, honorarium, traveling expenses and all that. So all these receipts and payments of revenue nature are recorded here, and all the capital receipts like legacy, entrance fees, donation, endowment fund, specific fund, all these capital receipts and all the capital payments like library books, purchase of land and building, furniture, sports equipments, all that are recorded on the capital payment or credit side. So all these are recorded in this receipt and payment account. And finally, what cash remains in hand is credited as by balance carried out. So now what is this revenue and capital? Maybe receipt or maybe payment. So revenue means which is usually not capitalized, means it is utilized in the current year. But capital nature means like the example machinery. A machinery when purchased will be used for so many years. So that is a capital in nature. But those expenses like purchasing a newspaper, it is a revenue expense because we will read and we will throw it out. So it do not have any further use, or we cannot use the same newspaper to read again and again for the year. So whatever transaction or expenditure or receipts we are done for within a year, it is revenue in nature. And whatever expenditures we have made for number of years, to get its benefit for number of years, it will be treated as capital in nature and will go to the balance sheet, right? And this revenue receipt and payments will go to the income and expenditure account. Okay, but because income and expenditure account records all the revenue items in nature and balance sheet records all the capital items in nature. Okay, now coming to my next slide, income and expenditure account. What is income and expenditure account? So the income and expenditure account summarizes the revenue generated and expenses incurred by the non-profit organization over a specific period. It reflects the organization's financial performance, right? It is just equal to the PL account, profit and loss account. All the expenses are written on the expenditure account and all the incomes will be revenues will be written in the income account. After that, balancing will be done, and if the credit is more than the debit, then the surplus came, and if the debit is more than the credit, then the deficit will came. So it is based on the accrual basis. So this account follows the accrual basis, where revenue is recognized when earned and revenue and expenses are recognized when incurred. So it provides a comprehensive view of the organizational financial activities. The accounts calculates the surplus or deficit for the period. It helps in assessing the organization's financial sustainability and planning for the future. Now, this is the specimen of profit and loss account. You can see here all the indirect expenses like salary, rent, repairs, postage, telephone, office expenses, depreciation, help to poor, small donations, prize awarded, all these are recorded on the expenditure side because these are the expenses. And all the incomes like subscription received, dividend received, rent received, donation received, all these visiting fees received, whatever we have received, it is treated as income and will be credited in the income side. Okay. Then the balancing figure, if the credit will be more than the debit, then the surplus will come, and if the debit is more than the credit, then the deficit will come. Then going to my next slide, what is the difference between the cash book and the receipt and payment account? I have told you that receipt and payment account is just equal to cash book, but there is difference between them. So what is the difference? The first difference is the recording methods. The cash book records all the cash transactions. Sorry. The cash book records all the cash transactions, including both receipts and payments, whereas the receipt and payment account summarizes this transaction, right? So it only summarizes the transaction. Now the next difference is the cash book covers all the cash transactions, whether related to current year or carry forward from the previous year, while the receipt and payment account focus on the current period cash activities only, right? Coming to the next difference, the cash book provides a detailed record of individual transactions, including the date, amount, purpose, while the receipt and payment account provides a summary of cash flow. What is the cash inflow, what is the cash outflow? It generally shows the summary. Okay. Next, coming to my next slide. What is the difference between income and expenditure account and profit and loss account? So, first one is focus. The income or expenditure account is used in NPO to track revenue and expenses related to the charitable activities, right? Because the whole NPO is based on charitable interest, while the profit and loss account is used for the profit organization. It is only for those organizations whose aim is to earn profit, and it monitors the business profitability, right? Then the second difference comes to as distribution of surplus. In non-profit organization, any surplus generated is reinvested in the organization's mission, whereas in profit organization, it is distributed among owners and shareholders. So, in case of trading businesses or profit organizations, the main aim is to earn profit, and this profit ultimately goes to the shareholders, owners, trustees. But in non-profit organization, as we do not focus in the earning profit, so whatever earning comes, it will go to the development of the whatever money we will receive in the sense of donation or charity, anything, it will go to the organization only to fulfill the organization mission in order to develop the organization and also to benefit the society more and more. Coming to the third difference, it is the legal requirement. So the NPO are subject to specific legal and tax regulations, and their financial statements must comply with these requirements, including the income and expenditure account. Profit and loss account, on the other hand, follows general accounting principles, right? Next, coming to the next slide, balance sheet. One more item which will be maintained by the non-profit organization is the balance sheet. So what is balance sheet? Balance sheet is a statement of asset and liabilities which shows the financial position of the business as on a particular date. So balance sheet, you can see the pro forma of balance sheet here. You can see here it is capital is recorded here. Okay, all the surplus will be added in the capital account and all the deficit will be deducted. Deficit means loss, it will be deducted from the capital account. And building, match fund, scholarship fund, endowment fund, election fund, all the fund items is recorded on the liability side. Then all the grants for building, government grants, donations, big donations, large amount donations, outstanding expenses, all these are recorded in the liability side of the balance sheet. And coming to the asset side of balance sheet, all the fixed assets like library books and sports equipment, billiard tables, lunch, laboratory, bicycle, crockery, curtains, investment shares, all these are assets, so should be recorded in the asset side of the balance sheet. Okay, next is your current assets like prepaid expenses, cash in hand, cash at bank, electronic installation, fixed deposit. Fixed deposit goes on the fixed item, but stock of refreshment, bar stock, stock of material, all these items comes under the asset side of balance sheet. So I hope you understand this. So here you can see the balance sheet provides a snapshot of the non-profit organization on a specific point of time. It presents the assets and liabilities and net assets, given an overview of overall financial health. So that is the main role of a balance sheet. Now net asset. Net asset represents the organization's financial position by calculating the difference between total assets and total liabilities. They indicate the organization's long-term sustainability and ability to carry out its mission. Right? Then reporting obligation. Non-profit organizations are typically required to prepare and present a balance sheet as part of their annual financial reporting. It ensures transparency and accountability to stakeholders. Okay. Next, coming to the next slide. What are the specific items of non-profit organization? So usually this non-profit organization is different from the profit organization. So the items used in this organization have a different name. So we should let us understand one by one. What is honorarium? What is honorarium? An honorarium is a voluntary payment made to the individual in recognition of their services to the organization. It is typically non-negotiable and may be given to volunteers, guest speakers or board members. So as to a person who works under us, we give salary. To daily laborers, we give wages. Like that, any person who is having here to give a talk or to sing a song or anything, in any person have a skill and he is invited to do so, to perform his skill. So we don't pay him salary or we do not pay him fees. We pay him the honorarium. Okay. So I hope you understand this. Next, coming to endowment fund. What is endowment fund? It is a pool of invested assets that generates income of the organization. It is designed to provide long-term financial stability and support ongoing program and initiatives. Right? So it is a asset that generates income for the organization. Now, subscription. A subscription refers to the regular contribution made by the member or supporters of the NPO. It can be monthly, quarterly or annually and provides a reliable source of funding for the organizational operation. Right? So subscription is a income for the NPO because they will receive some kind of money annually, monthly or quarterly by the subscription account. Next, there are other specific items like entrance fees or admission fees. Whenever a person is admitted as a member of the organization, certain amount is charged from him or her to give him or her admission. This is called entrance fees or admission fees. Total amount of entrance fees received during a year is shown on the debit side of the receipt and payment account, right? So entrance fees, whenever we enter to anything, then we have to pay something. So these entrance fees is just like that. So we have to pay entrance fees in order to get a admission or getting an entry. Next is our life membership fees. So membership, if granted to a person for the whole life, the special fees is charged from him or her. This is called life membership fees. So it is charged once in lifetime of the member. It is capital receipt of the organization. So what we came to know here, that life as the name suggests, life insurance is for the lifetime, and life is uncertain. So that's why it doesn't move year and year. It is for the entire life, and so it is capital in nature and should go directly to the balance sheet. Next, coming to the endowment fund, which I have already mentioned, that it is a fund which provides permanent means of support for an organization. Any contribution towards this fund is an item of revenue receipts, capital receipts. Then coming to donation. What is donation? Everybody says donations means charity, but actual meaning of donation is the amount received from some person, firm or company or any other body by way of gift. It is also an important item of receipt. It can be of two types: specific donation and general donation. So specific donation is a donation received for a specific purpose, like donation for library, donation for building. This is known as specific donation, because this donation is received for a specific purpose. Until and unless this purpose is fulfilled, till that it is our liability and shown in the balance sheet. Then general donation. There is a general donation which is received not for the same specific purpose. It is received for general use. So it is revenue in nature and can be recorded in income and expenditure account, right? Now coming to general donation, it is of two types: general donation of big size, general donation of small size. Now let us understand about legacy. What is legacy? It is the amount which is received by organization as per the will of a deceased person. It is treated as a capital receipt. So whenever a person before leaving this world give his whole in hard earned money or property to somebody, this is known as legacy. That means after his death, all the properties will be maintained by such a person to him he has given the legacy. So this is also a capital in nature and should go to direct balance sheet. Now next is sale of old members periodicals and sports materials, right? So as every day there should be newspaper, so that the students can read or all that. So see, after 1 month there will be 30 or 90 newspaper. One may be from English, one may be from Hindi, one may be from Marathi. So three number of papers we purchase every day for the society or for the children's. Now in 30 days it becomes 30 into 3, that is 90 newspapers. So what we will do with these 90 newspapers? We will sell it. So sale from old newspaper, periodicals or sports materials are the source of revenue. Money realized from the sale of such item is shown on the debit side of the receipt and payment account. You got it? So now coming to my next slide, you can see here subscription received during 2018, it is 30,000. Subscription outstanding in 2018, it is 8,000 and 2,000. Outstanding is 8,000 at the beginning of the year, 6,000 outstanding at the end of the year. Like that, in subscription received in advance, 2,000 is in advance at the beginning of the year, and 4,000 is in advance for 2018 end of the year. So what is the trick or what is the formula for that? Let you understand that here you can see the subscription amount is 30,000. So subscription is income because it is received. Okay. So in the income and expenditure account, credit side, you should write that subscription is received rupees 30,000 now, but subscription outstanding at the beginning of the year. If somebody gives you money at the beginning of the year, okay, but not giving you money. Actually, if somebody do not give you, it is outstanding, right? If the subscription is outstanding in the beginning of the year, what does it mean? It means that subscription is from the last year. From last year it was carried forward to 2018, right? So it will be subtracted. If as it is showing in 2018, but actually it is the expenses of 2017, so it will be subtracted. You can see here it has subtracted the opening outstanding, which amounts to rupees 8,000. Got it? Next, coming to subscription outstanding at the end of the year, which comes to rupees 6,000. Okay, what does it mean? When somebody do not give us money at the end of the year, this means that he have to give it in 2018, but he has not paid. So this is 2018 receipt, which we have not received, but it is the income of 2018. So we will add it. So you can see here outstanding closing is added. So you should remember this, that outstanding at the end will be added because it is of the current year, and outstanding at the beginning will be subtracted because it is of the past year. The same thing applies in advance. What about subscription received in advance? If you are receiving the subscription in advance in the beginning of the year, so obviously it is for this year, current year. If somebody is paying me in January and I will close my books of account in December, so obviously this January advance is for February or March or April or December. So it is the current year advance. So we will add it. You can see here opening receipt in advance will be added. But opposite to that, if somebody give me advance in December 31, so it is for future. That advance is given for 2019. So it will be deducted. Sorry. So subscription received in advance in 2018 at the year end will be deducted. Okay. So this outstanding is opposite of this advance, right? Sorry. You can see here outstanding closing and advance opening is added. Outstanding opening and advance closing is subtracted. Next, coming to the balance sheet. How does it will be treated in the balance sheet? So as we know that if income is outstanding at the end, then it is our asset. So it should be shown on the asset side of the balance sheet. Likewise, if somebody has given us advance for the future, then it is a liability on us because we have not done the work. So coming to balance sheet, you can see what should we put in the balance sheet. So when there is something received in the end of the year in advance, so it is for the future and we will not have done any work for that. So it remains our liability. So it should be shown in the liability side. Likewise, subscription received or outstanding at the end of the year. If the subscription is outstanding, that means it is yet to receive. So it is our asset. It should be shown on the asset side of the balance sheet, right? Next, coming to my next example, you can see prepare income and expenditure account when receipt and payment account is given. So here the Chandigarh club who has prepared receipt and payment account for 2018, you have to prepare income and expenditure account. So now these are the payments. Okay, here are the payments. It will go to the expenditure side. There is a cross because payment is related to expenses. These are the receipts. So income will be whatever the income, it will be recorded here. The thing is that all the receipt will not be go to income side because income and expenditure account records only revenue nature transactions, right? Capital nature transaction will not be recorded in income and expenditure account, but in receipt and payment account we will found both revenue and capital nature transactions, right? From there we have to extract only revenue nature transactions and we have to put it in income and expenditure, right? So what are the items then we will evaluate now? You can see rent, repairs are revenue expenses, so it will be put in here. Equipment is an asset, so it will not go here. Telephone is an expense, salary is an expense, traveling is an expense, newspaper is an expense, functional expense. These all will be recorded here. Telephone, salary, all that. In the question there is a depreciation of equipment 20%. Here equipment comes to rupees 10,000. Asset will not go, but depreciation is a loss, that is the decrease in the value of asset, so it will be recorded on the expenditure side. So 20% of 10,000, okay, it comes to 2,000. So this 2,000 will be recorded here. Got it? So from the income side, what will be taken into account? So there is sale of old newspaper, it is revenue in nature. Sale of grass, interest on bank deposit, these all are revenue in nature. Like that there is subscription. So there are 3 years, 17, 18, 19. I have already told you that current year subscription will be taken. So the current year here is 2018. So in 2018 the revenue is 42,000. The subscription is 42,000. And as per question, outstanding subscription at the year end is 3,000. So I have told you whatever outstanding is in the year end, it will be added. So you can see here subscription is 42,000. 3,000 is the outstanding, the total amount is 45,000. And also here you can see okay, here you can see everything is there, like your salary. Here you can see salary is outstanding on 2018. So if it is the closing one, so it will be added. So salary of 2,000 is added, it becomes 13,000. And there is a salary outstanding on 2017. So this is not of the current year, so it will be deducted. After that the salary amount comes to 10,000, right? Then all other expenses which I have marked here as correct sign, these all are here. Now all the items we have seen that everything is there, no other items was left. So here the income and expenditure account is ready. Now you have to find the profit or loss. So the profit is known as the surplus and the loss is known as the deficit here. So if the credit is more than the debit, it is surplus, and if the debit is more than the credit, then it is the deficit. Now you can see, okay, you can see here we got the surplus of 4,000. The total credit is more than total debit, so there is a surplus of 4,000. So I hope you understand this. Next, coming to my next slide, okay, it is about to prepare income and expenditure account and balance sheet. So here the question is you have to prepare, see, you have to prepare income and expenditure account of Silver Stick Cricket Club. So what is the question here? These all are the receipts, these all are the payments. First of all, we have to evaluate what is revenue in nature. So you can see here is new building. New building is a capital nature. It is used for more than 1 year, so it will be treated in the balance sheet. Here there will be souvenir. Souvenir is just like the journals. It is a monthly subscription, so it will be recorded here. Expenditure. Salary is a revenue nature expense, so it will be recorded here. Now salary have some adjustment. You can see salary outstanding rupees 1200. So it is outstanding, so it will be added. So you have to add outstanding and the amount comes to 7200. Like that, postage. Postage is an expense, telephone is an expense, electricity is an expense, maintenance is an expense, newspaper is the expense. All these things is the expense, and outstanding electricity is there, outstanding telephone is there, outstanding postage is there. All these will be added to the particular expense to get the final amount. So like salary, postage, there is a you have to add the outstanding. In telephone you have to add the outstanding. In electricity you have the outstanding. Then in maintenance also you have to add the outstanding if it is in the question. But coincidentally in maintenance there is no outstanding, so you can put directly the amount. So all these are over. Now newspaper is 500 already we have taken into consideration. Coming to the income side, there is subscription and there is donation. It is capitalized, so whatever capitalized it will go to balance sheet. Activity collections. Activity collection is revenue in nature, should be recorded here. Sale of newspaper, souvenir, advertisement is revenue in nature, it will be recorded here. Sale proceed of old building, it is the building, so it will be capital in nature, so it will not be recorded. Then the last one is to income from investment. Income from investment is a income, revenue, so it will be recorded here. So now coming to the subscription. Subscription of rupees 12,000 is there. Here in the adjustment, subscription includes 2018 1000, due for 2019 800. So how it will be treated, we will see now. Okay, you can see here. Okay, see here the working note. Okay, it is given that the subscription during the year is 12,000, and in 2019 the subscription is, now the year ending is 2019, right? So at the year end the 800 is outstanding, so it will be added, it becomes 12,800. And for 2018 it was received, or it was outstanding rupees 1,000, so that was for the last year, so it will be subtracted. So the final amount is 11,800. Okay, now coming to next, this is, okay, here we have put the subscription as 11,800. Now going back to question, depreciation on building is 5,000. So building in the question comes to 75,000. Okay, so 5% will be recorded here as depreciation to building, that is 3,750. Now all the amount we have recorded, now we have to total the credit amount and we have to subtract all the debit amounts, and we will get the excess of income over expense, that is the surplus. Okay, so here the surplus carried down comes to 4,450. So now coming to balance sheet, so here you can see the building as given in the question, it is 75,000. depreciation we have to subtract and we get the final amount. After that, investment is in the question as interest. It is given that 10% interest is 4,000. In the question it was given. So if 10% is 4,000, then 100% will be 4,000 by 10 into 100. So it comes to 40,000. Right? So 40,000 is the amount of investment. Now next, coming to subscription outstanding. As at the year end the subscription outstanding, so it will come to asset side, because we will receive it in future. Then as I have told you in the question, if it is carried down, it means that it is, if there is a carry down in the question, then you should know that it is the closing balance of cash. So here you can see there is the cash and bank balance of 311,600. This is the closing balance. So it should be recorded as cash and bank. Okay, here you should record it as cash and bank of the same amount. Now the asset side is over and the total amount comes to 1,23,950. Coming to the debit side, whatever outstanding there is in the adjustment, it will come to the liability side, like outstanding salary, electricity, telephone and postage. It is the total amount is rupees 1,500. Okay, whatever surplus we get from the income and expenditure account, it will also will be recorded and added in the capital account in the liability side. So the main thing is the capital amount is not given in the question. So you have to find this capital, and after that we have to add the surplus which came to 4,450, and there is also a item in the balance sheet there, that is a donation. Okay, capitalized donation. So that will also be considered now. You can also, here it is capitalized donation. So this will either be written as a separate item in liability side, or you can also add it in the capital, right? So here it is added. So you can add the capital 13,000 and you will find the amount 1,22,450, and the total liability comes to 1,23,950. But the question still arises that how this 1,05,000 came. So this is a very simple process how it came. First of all, you will total the amount. Okay, there is two way of calculating it. See, if the total asset comes to 1,23,950, and as we know total debit amount must be equal to total credit amount, we will subtract all the other items, like all the outstanding expenses of 1,500 debit side, and we will subtract for the net income 4,450, and we will deduct the donation 13,000. After all these adjustments, we will find an amount of 1,05,000, which is our capital fund, or you can say it is the balancing figure. Okay, or else what we can do, we will make the balance sheet of the last year, or opening balance sheet it is known as, because capital, whatever capital we put in the balance sheet, it was opening capital. After adding net profit, interest on capital, subtracting drawings, we get closing capital. So in the question, the closing capital, in the question we get the closing capital is 1,22,450. Profit is there, donation is there, but we do not have opening capital. So this opening capital can be found from this balance sheet. Okay, you can see here. Here is the building. The building which is sold in 2019, previously it cost 60,000. So the cost of building is 60,000. The investment is 40,000 as per the question. Subscription outstanding in 2018. It will be considered because it is last year 2018 balance it is there. So it will be recorded as asset. Opening balance of cash in bank, that is two balance brought down in the receipt and payment, will be considered here as bank and cash. So the total asset comes to 1,05,000. And the liability, there is no liability in 2018, so the balancing figure comes to capital fund. This balancing figure is used here as the capital fund. Okay, and all the current year profit of 2019 is added, donation is added, and we get the amount of closing capital 1,22,450, and accordingly the balance sheet tallies. So I hope you understand this. Next, coming to my conclusion. As you know, non-profit organization treatment is very much different from the sole trading and partnership business. They are profit-making organization. This is non-profit making organization. But if you will go thoroughly through all the items, you will be able to understand everything. Okay, thank you.